the management and get to know what really transpired in the company in the quarter gone by. We have Mr. Keshab Panda, the MD and CEO, joining us right now. Mr. Panda, good morning. Thanks much for joining us. It's been a robust set. And given the new launches, the increased ad spends and the premium nature, what can we expect in terms of volumes, sales and margins range in the current fiscal? How is it looking like?
Few things we did reasonably well. The large deals we own earlier and some of the deals we own, innovative deals we got this quarter, all put together. Not only this quarter, and last year we had a wonderful year. We did very well, 20+% growth. And this quarter again the same thing, 9.2% growth we did in rupee term, and sequentially 5.6 in the dollar terms, constant currency terms, 40.1 year on year in rupee term, and 33.2 in dollar terms. I think overall point of view, this is something which is we are excited about it. One point, our even the net margin, our net income is 197.5 crores. I think this also is increased year on year 101.1%.
Mr. Panda, hi there, good morning. Now, digital and new tech, that accounts for close to 31% of your total revenue, and we understand that it continues to grow rapidly. How are the deal size graduating here? Is it lifting your overall margin picture as well?
I think 31% digital plus what you call new technology, artificial intelligence, machine learning, and all this put together is 31% of the revenue now. It's growing faster. Now, what happens, same customer when you are doing a product, now that product you do smart product. Now, every product talk to each other. Then we have a system. Then system to system talk to each other. So, I think this is much more complicated than this. If you go to IoT in our case, in engineering sense or technology sense, it means we have a sensor, there is a gateway, there is the edge analytics. Then you come to our own platform called Ubiquitous IoT platform we have. Then after that it comes cloud or analytics, and these are the stream of work. So, I think when you do a revenue, what used to happen earlier, the POC, what customers were giving us, can you make my product smart product? So, that I think is a small project. There are some customers where you say we have successfully delivered the smart product. They are asking about, can you connect system to systems, or can you design the complete smart systems as a whole, or can you do the system to system connectivity? So, altogether I would say the revenue in numbers now, it could be anywhere from 100,000 to 2.5 million.
Mr. Panda, you mentioned about a couple of multi-million deals that you had bagged. What were the TCV deal wins, and how does the order book stack up presently?
See, last quarter we announced some of the deals we own, and numbers we have given also. For example, we talked about a aerospace customer, we got a 50 million deal. That number we have announced all in public. We also talked about Exxon customer name we have given. We said the first year revenue is 12 to 13 million is what we are going to do, and that also is in public. It's all public. Then we talked about Cobestro, there is a deal, chemical company we own in Europe, that also there is a number. Similarly, this year there are sizes anywhere between. What happens is you do phase 1 of the project is 5 million to 7 million, then phase 2 is 25 million or 10 million. So, I think these projects what we own, this quarter, some of the innovative project we own. For example, we got a smart inhaler design. You may not imagine amount of technology being used. We do the smart drug design and communication to patient to drug. There is a different things what is happening there. We also into smart manufacturing. There is a product, some of the platform we have, that NB-IoT, the gateway, plus our M-Care platform, all the platform together, we are right now doing a OEM, auto OEM, and that again making a difference. So, I think overall point of view, the size of the deal anywhere, whatever we own this quarter, anywhere between 5 million to 20 million. That's the range I would say.
Now, the EBITDA margins continue to improve, and that's really backed by high growth as well as the favorable forex and operational efficiencies. Do you think that you can maintain these kind of margins? Can you give us the range that you're working towards?
Of course, I will not give a number right now at this time. Maybe I think I will be in a position to do that later. But I can tell you one statement we made that last quarter, if you see, I did say not only revenue growth, we intend to grow EBITDA, this year, FY 17 to FY 18 to 19. Our focus is going to be that, and I'm sure there are levers available. Otherwise, I would say, I can't go beyond that. There are absolute levers available. There is no doubt about that. And we are working on, unlike IT engineering, what happens is, it might take a quarter, it might take 2 quarters, right? But absolutely, I have no doubt in my mind, there are levers available for EBITDA improvement, and which will continue to focus. Otherwise, I think we are not doing right. I think there are a lot of options available, and we are exploring that as well.
Based on the deal pipeline that you have and the client budgets, what is the kind of growth that you can guide us for this year?
Listen, I think, one of the assets we have to remember that we have 49 of top 100 ER&D spender our customer. That's the biggest asset we have. And these customers are spending $1 billion plus ER&D every year. If this is the asset, how much we can extract from that to grow and what percentage we are going to grow. Last quarter, I made a statement that we have given a guidance of 16% growth from FY 18 to FY 19. Okay, that's a guidance I have given last quarter. I will stay there. Maybe we'll have more visibility beyond, and we'll talk about that. But definitely that 16% minimum is what we have given guidance last quarter, and we'll continue to focus on that.
Finally, many IT companies are announcing buybacks, but you are a relatively young company and you're very keen on inorganic growth, we understand. So what is the net cash on books? What are your utilization plans?
Till the company was listed, L&T policy was always the profit was given as a dividend to Larsen & Toubro, right? That's a company policy. Now, after we listed the company, we give the dividend, 35 to 40% we give dividend, rest of the money we have around 500 crores at this time in our book. Now, this 500 crores, whether I need money for acquiring companies at this time? Yeah, of course. As we speak now, every quarter at the beginning of the year, I do a gap analysis. What are the technology I need to build? Which are the technology I must buy? Which company I should buy? But one thing to remember though, there are not many technology companies in the world, which type of companies we need in technology, we need not more than 25 to 50 million. We are not acquiring a company for revenue, we are acquiring a company for technology and or the customer growth. Especially if customer I need to acquire a company, technology which I can grow faster than what I have need today, I would do that. So this cash I need for those, I don't have to go anywhere. I have enough cash to acquire those companies. And every time we look at it, whether if when cash I don't need that cash, and I would rather give you the dividend, and I'm okay with that. So that's the strategy I think we have at this time. We'll continue for at least coming quarters.
Okay, Mr. Panda, thanks much. It was great chatting with you and getting to know what the company is